Okay, thanks Paul, and thanks to Nicholas and also to Reed Corporate for putting on another fantastic event, and thanks to all of you for not going to the Melbourne Mining Club. So Pan Asia Metals, a little bit about Pan Asia Metals. Pan Asia Metals is the only lithium explorer in Southeast Asia with advanced lithium projects. South and Southeast Asia has a population of 2 billion people, a quarter of which, or 500 million, are moving into the middle class. This is one of the largest future EV and lithium-ion battery markets in the world. We've got India, Vietnam, Indonesia, Malaysia and Thailand all moving into EVs and LIBs, with a lot happening in each of those centres. We're in Thailand, right in the middle of it, and we're the only ones there. So this is an absolutely fantastic opportunity. The next part of the puzzle is capital. Where's it coming from for construction? And we've seen through the last 5 or 6 years with the lithium market going into growth, no banks have really entered the market yet. We have 5 main producing lithium areas in the world. WA and South America, of course, they're the biggest suppliers at the moment. We have producers in West Africa, we have emerging West Coast US and also, of course, Canada, and they're all going to be big suppliers. The problem is, where's all the capital? And I think the leading projects in all of those jurisdictions will get their project financed. The tail end will have a bit more trouble because banks don't like concentration risk when it comes to geography and commodity. In Southeast Asia, where PAM is, being the only one there, we don't present that balance sheet problem for banks, but also we have very deep capital markets. We've already had discussions with the IFC and they've said this is the sort of project we want to fund. So we're in a really good position from a capital perspective and also from an equity raising perspective. The Southeast or the East Asian market has very deep capital markets, and projects like ours with a downstream element, which I'll get to, are very attractive to them. And then we're looking at lepidolite. So this is not common. Most of you would have heard about spodumene or brines, and there's this mantra which is going on about which is best and so on. The reality is, if you produce a lithium chemical, they're all the same. But the key thing about lepidolite is where it is on the cost curve. So this cost curve here was published by Tianqi when it did its IPO on the Hong Kong Exchange in June this year and was put together by Wood Mackenzie. So fantastic name. The green bars are lepidolite production in China. These projects have a grade ranging from 0.2 to 0.6% Li2O, yet they're still near the bottom of the cost curve. There's a few key reasons for this. Lepidolite doesn't have the requirement to crack from alpha to beta as spodumene does. Lower roast and a shorter roast. Also, if your project's located in a low-cost environment and your transport route to lithium conversion is short, you have reduced costs. Where we are in Thailand, which I'll get to, we have very short transport routes and a very low-cost environment. So one of the advantages of lepidolite and geography is that you'll be near the bottom of the cost curve. Now, there's a big debate out there about whether it's nickel, manganese, cobalt, or NMC battery formula, or LFP, lithium iron phosphate. Most of the market thinks it's all NMC, so you need to produce spodumene, which will produce lithium hydroxide, which will produce NMC batteries. It's actually not right. 50% of the Chinese market is LFP. LFPs have a lower energy density, so a shorter range, but there are developments like LMFP, so there's an introduction of manganese, but also they're less volatile chemistries and they use lithium carbonate. Lithium carbonate has a long-term shelf life, lithium hydroxide doesn't. Horses for courses, NMC has a place in the market and always will, but LFP has a huge place in the market. The reason Tesla, Volkswagen, Mercedes and Ford have said they're going to use LFP batteries in their lower-end vehicles is they don't want the headache of securing or sourcing nickel and cobalt. So LFPs are more stable and you don't have these supply chain issues. And at the end of the day, when someone buys a lower-end car, how many people pop the hood and check which engine it's got? Not many. And how many people travel more than 30 kilometres a day, even in environments like Australia? Not many. And if you're buying a Tesla 3, the lower-end one in Australia today, it's probably got an LFP battery. So it doesn't matter. So LFP will be around 50% of the global battery market, particularly in Southeast Asia and Asia, where you've got two-wheelers and three-wheelers, and it's all about price, and even small four-wheelers. For instance, the Chinese actually manufacture a car. It has a battery and wind-up windows. So it's all about cost. My time is not going, so I've got forever here. Why Thailand? So Thailand is the largest auto producer in Southeast Asia and the fourth largest in Asia. So when you drive around or look around your roads in Melbourne and Sydney and wherever, just about every dual cab ute is made in Thailand. A lot of the smaller Japanese vehicles are made in Thailand. It's a massive market and very important to the regional auto production. So Thailand is integral to local vehicle production, and our projects are located just south of the Eastern Economic Corridor, which is just south of Bangkok, where all this is happening. On this picture, you can see there's 21, I think that's 21 logos of companies which are producing vehicles there, and the Thai government wants to retain its leadership position. So they introduced the electric vehicle policy, I think 3 or 4 years ago, to encourage auto producers to start producing EVs there. Mercedes is producing its flagship EQS EV in Thailand already. Geely, BYD and Great Wall from China have started or are about to start producing EVs in Thailand. And then there are battery manufacturers circling. We've already had discussions with battery manufacturers about supplying product in Thailand. So this is a massive market. The Thai government also introduced the mining policy. The mining policy is focused on companies like ours, which are producing or going to produce battery and critical minerals. They want to lock up their supply chain. And in preliminary discussions, the Board of Investment in Thailand actually said that they're thinking of offering an 8-year tax break to mining companies. There's only one lithium explorer developer in Thailand, so that's us. So it's a really good environment for lithium mining and chemical production, and then EV and LRB or lithium-ion battery production. And being part of that supply chain means that we get special treatment from the government. We're an important part of that supply chain. At present, there are 18 electric vehicle projects underway and 14 battery projects, so it's a pretty large market. On value adding, we're all about moving past the mine gate. So our objective initially is to produce a lithium carbonate. We've already had discussions with potential partners on using our lithium carbonate and their knowledge to produce cathode active materials. So we want to get right down into the chemical process. So Pan Asia Metals doesn't need the knowledge to produce cathode active materials. Our joint venture party will have the knowledge. We have the product. And in this environment, where there's a lot of fear of missing out on securing your supply, we have a great negotiating advantage, particularly where we are. So we're going to try and use that and build a chemical company out of Pan Asia Metals. Now, a bit on the company. So we have a market cap of around $60 to $70 million, say $65 million on any one day. We have cash as at 30 September of about $3.4 million, and we're in a very low-cost operating environment. Our quarterly burn is about $1.2 million, depending on what we're doing. And we get about 2 to 3 times the drive out of our dollar than we would in Australia or Canada. So we get a lot of bang for our buck. Our drilling, all in, is $100 a metre. It's about $250 to $300 here. 147 million shares on issue, no convertibles, no options. It's completely clean capital structure, and management has around 50% of the company, management and board. So we're aligned with our shareholders. Every time we make a mistake, it hurts us just as much as you. And every time we look at a dilutionary event, we want that dilution to pay. So every dollar we spend or every dollar we invest, we want $2 or $3 return out of it. We don't want to get through to the next quarter and wave the flag and get our paycheck. The board has 5 members. Myself and David Hobby have been working together and in Southeast Asia for 10 years, looking for projects. We understand the region incredibly well. Our non-executive directors, David Doherty, has been in Thailand since the mid-80s. He lives in Sydney, but he's had projects and exposure to Thailand since the mid-1980s. Thanasak Chaniaphoon is a Thai national, a lawyer, very well connected with business and the government. He's our go-to man if we want to see the Minister or the Secretary-General or whoever it is to ask the questions we need to. And then Supriya Sen, Indian national, Singapore citizen now, former senior advisor at McKinsey, former project financier at the World Bank, Asian Development Bank and Citigroup. So she understands the debt markets and the Asian environment. So we've got a board with a massive amount of Asian experience, which is really important when you're operating in a region which is foreign to the one you grew up in. And what we do, we have 3 projects. The Rionket project, which is about 20, 25, 30 minutes out of Phuket, is our lead project. That's a lepidolite-style mica lithium project. We have the Katatong lithium project to the north, which is under application, and the Khao Soon tungsten project is how we got into Thailand about 10 years ago. So it's one of the leading tungsten projects in the peer group globally, but it's the lithium we're focused on. And you'll note here we've got the words rail, road and barge. So depending on where we produce our concentrate and our chemical, it depends on which route we'll use up to the Eastern Economic Corridor. But if we're shipping a concentrate, it's actually a short truck route across the peninsula. We're already discussing with EV truck manufacturers how that would work, and also then a barge up to the Eastern Economic Corridor. The Rionket lithium project has 2 prospects. The lead prospect to the south has a 10.4 million tonne resource at 0.44% Li2O. We just did rock sorting work on that, and we upgraded the core we used in that sample from 0.5 to 0.92% Li2O, which means that our CapEx is down because we've got smaller plant, and OpEx is down because we're processing less. To the north, we've got the Bangi Tum prospect with a drill-supported exploration target of 8 to 14 million tonnes at 0.5 to 0.8% Li2O. And we just completed geochem work there, and we've increased the target zone by 200%. A little more on Rionket. You see a cross-section here, so it's a lepidolite dike swarm, and in our ore sorting pictures here, we managed to remove 61% of the waste, which was basically all below cut-off, so it was real waste, and almost double our feed grade. You can see the drill intersections here. So we provide shareholders with a composite intersection, and our composite intersections range from 30 or 40 metres right through to plus 60 metres, and there are plenty of intersections there at plus 1% Li2O. So it's a really fantastic looking prospect. The Bangi Tum prospect to the north is going to be better. So we've got our exploration of 8 to 14 million tonnes at 0.5 to 0.8, but in our geochem work of 64 rock chip and channel samples, which are non-selective, because you can only select so many, 44 of those at a 3.3% cut-off average 1.5% Li2O. 12 of those were above 2%, and we've got the highest grades here, of course, of 2.62% Li2O. So we've increased our target zone by 200%, and I think this will allow us to get our total resource through to around 30 to 40 million tonnes. Our objective is to produce 10,000 tonnes of lithium carbonate for 10 years to start with. 10 years means it's bankable, and then we want to expand on that. The Katatong project to the north, this is a compilation of 5 applications. 2 have geothermal in them, 4 have hard rock, we expect lithium. We've already identified Li2 bearing pegmatites, but old tin mines, perfect ground to increase our project area. This will complement the Rionket project. We've got hydropower station to the north. The grid passes around the bottom of this project area and straight through the middle of the Re-Enquête project. Sustainability strategy. So our view is that if you don't have your community on site, you won't get a mining licence. So we're big on ESG. We focus on education, gender equality, and also our production and consumption. So we sponsor community sports, we sponsor schools and healthcare. And to finish off, so the only lithium explorer in Southeast Asia. We're in an absolutely low, one of the lowest cost environments in the world, with the car industry to the north of us. Encouraging metallurgy has allowed us to increase our feed grades. Thailand will be the largest EV and LIV producer in Southeast Asia. There's no doubt about that. It's just too big a production centre already, and we've got a very tight and well-maintained capital structure. Thank you.